What's going on, boys? Haven't done this in a while. Make sure we're live. Okay, what's going on, Ricky, Andrew, Carlos, Gervish, KB, Hardik, New Tanda. New Tanda. Okay, so we'll just go over a couple of things. What's up, Carson? How you doing? Go over a couple of things here. The newsletter basically says it all. That's why I stopped kind of doing these things. I give my thoughts for the week on Sunday. And it's basically playing out exactly how we thought. We exited the puts down around here, these 2 days here. We did get a little bit more pullback, but again, I always leave the last little bit. It's just, I don't really need to catch the exact bottom or the top. What's up, G Money? How you doing? We'll go over SPX here. So basically what I pointed out yesterday at close, we have this recent rally from the 34.91 low on CPI, I believe, or was it FOMC? One of the 2 days. We had a low here, 34.91. The high of the rally was $4,100.96. I'm talking about SPX here. So if you draw the simple fib retracements, if you guys are in MSL, you know how. But if you don't know how, it's just this little button on the side here. Click fib retracements, draw it from here to there, there to here, whatever you feel like doing. But basically, what happened was we retraced, we lost the 0.382, we went all the way down to 0.5. The only reason I didn't go really heavy yesterday, even though there was a doji candle right that stopped right at the bottom of the 0.5 retracement, the reason was because on the last rally here, as I pointed out yesterday night, I know a lot of people were confused by this, but if you draw the exact same fibs on the last bear market rally we had back here in August, you guys see where we rallied up, then we dipped. We did not stop at the 0.5. The 0.5 would have been 39.81. We went all the way down to the 618, which was 38.99. We made the exact same candle at the 0618, and then we went on a massive bear market rally. That's exactly what I'm expecting to happen this time off the 0.5. I do expect a rally to at least maybe this purple line, which is the 20-day moving average. 20-day moving average would put us on SPX around 39.62. So that's my target for this rally here. I'm giving you guys a little secret. I haven't told you guys this number yet, but this is what I'm looking for on this rally. Is 39.62 on SPX. Around there, I will start my put swings again. I'm not going to go all in. I'm going to start scaling in around 39.50, 39.60 area. And that's where I think this rally will go. Other than that, can move on to QQQ. Noticeably weaker than the rest. Obviously, yields are rising. It's harder on tech stocks than it is the other stocks. Right now on QQQ, you guys see we filled that lower gap to 268.58. I've been talking about that for forever. So we got that big move down. We filled the gap. They held the gap. They closed above the gap yesterday. And we got some follow through today. So you could almost call this a Morningstar candle as well. You guys see the big rip. I also did call out TQQ equity for one. This was one of the reasons. The other reason we'll go over in a bit. Other than that, right now, what I have alerts on, I have an alert at the 50-day moving average, which is right around 278.29. So that's the first target for this rally, as I said. And the ultimate, if they really want to rip this, QQQ can go all the way and fill this gap that we left. So we left a gap, actually, this is the low 283.19. The high here is 283.01. So we left a little tiny 18-cent gap up here. Maybe they rally it till there, maybe they don't. But 50-day moving average should be your target if you're long anything in tech. Other than that, thanks KB, even on my own YouTube video, you're calling out your own targets. This guy. Tag your message in Discord too. But anyways, the 50-day moving average is the first target for any tech stocks. Other than that, if we keep going, we might even reach the 20-day moving average, which coincides right now with this gap up here at 283.19. Next, we have IWM, which is one of the weakest ones. Obviously, you guys know I love shorting this piece of shit. It's a small business, the small caps. So basically, you guys know during a recession, small caps are the weakest. A lot of mom and pop shops close. A lot of small businesses are in trouble. They just don't have the customer base that they need to last through a recession. Other than that, you guys see IWM. A long on IWM makes sense. It can go up to 178. Why do I say 178? Same thing, guys. We left a gap here on December 14th on all the indexes. That is now my target on this rally. That's why I was so confident we were going to rally. That's why I took off all my puts, as you guys know. We basically caught the exact top on puts and we just scaled all the way down for 5 days. And then I switched long and now we're moving up. So everything's working out just as we expected so far on the index level. Other than that, I'll send you guys my levels in the morning. We got DXY here, so the dollar. Keep an eye on the dollar because of that whole Japan thing that's going on. Basically, that means that um, Japan is buying back, they're going to be buying back their own bonds. If they're getting yield in their own country, why are they going to buy US bonds and US equities, right? So the thing is, right now, the US dollar should go down with that move, but also TLT should go down with that move, technically. We'll go into that after. DXY sitting at a very important spot here. We're right on the 50-day moving average. You guys seen last week, they dipped it below the 50-day moving average. They closed the weekly in a hammer candle above it. So if DXY closes this week under 104.20, 104.20, that will just be another reason why this bear market rally can go to the upper limits that I was talking about. So keep an eye on this number. Keep an eye on the 50-day moving average. On Friday, we need to close below that for a rally to keep going. Other than that, let's go on to TLT. I did take some TLT puts at the close there. I just explained you guys the Bank of Japan why I'm doing it. Bonds should be weak technically. Why would they buy US bonds? They're actually going to sell their US bonds to move back into Japanese bonds. And so what I'm watching on the TLT here, this is a daily chart. You guys see this? This yellow line is the 50-day moving average, purple is a 20-day, and the green is the 100-day moving average. Let's see the 200-day moving average. 200-day moving average is still well above. But the thing on this is, so if you guys look at the 100, the 20, and the 50, right now we are stuck underneath. So we broke through the 100-day moving average, retested it, popped again, made a lower high, and then we rolled over. Once we gain an important level and then lose it right away, that's a very bearish sign. So that's why I'm in TLT now. I was waiting. I wanted to see if that huge flow that we saw the last 2 days stuck, and all the open interest is still there. These guys have big bond puts in the millions of dollars for January expiry. I took February expiry, so hopefully we can catch the whole move. For right now, my target would be the 50-day moving average, obviously. Pretty clear, $100.60. That'll be my first scale out point. If we start losing that, you guys can look back in the past. If you start losing the 50-day moving average on bonds, it's just a train wreck. The last time we lost it was way up here, the top of the August rally. And remember, bonds react more quickly than stocks. So basically, the stock market can still rally for 2, 3, 4 days, whatever. Bond market will start rolling over before the end of the rally. As you guys seen here, where is it? August 2nd was the high in bonds on TLT. But if you look at SPY, oh, this is going to be a messy chart. If you look at SPY, August 2nd was the end. August 15th was the end of the rally. The bear market rally in SPY lasted all the way to August 15th, whereas bonds started rolling over. They made their high on August 2nd. So another 13 days of downside before the stock market even reacted. So that's why I took it today, even though the market is going to rally, or should rally technically. Bonds can roll over and will roll over before the market. So that's why I took it today. Let's see how it goes. I did go in with a little bit of size when I said it's kind of heavier than normal. I am planning on making it heavier than normal. Right now I did say half size. It's a little bit less than what I usually take. G-money. Okay. Other than that, VIX. VIX is also supporting a rally here. Why is it doing that? We lost the 20-day moving average, guys. It's very clear. I mean, I've been pointing this out in the group over and over. We lost it here on December 14th. That was the stock market high. The next day absolutely ripped. And the 2 days after, we kind of held over this purple line, which is 20-day moving average. Now we broke below it with force, down almost 7% today. And I do expect VIX to go even lower if the rally wants to keep going. TQQ play is pretty obvious. I went over it in the chat as well. This is why I don't do post market, guys. I tell you guys everything in the premium chat. Here's the TQQ with the Bollinger Bands. As you guys see here, spend 1 day outside, rallied straight to the mid band. Right here, touched the bottom of it, rallied straight to the mid band. Right here, touched the bottom, rallied straight to the mid band, and right now we actually closed almost 3 days outside the daily Bollinger Band. I jumped in yesterday at 1810. Today it went up to 1925, so nice little gain there, but I think there's a move all the way up to 21, which is the mid band would be around 2117. Other than that, I'll show you guys some stocks that I'm watching for puts when it's time. It's not time yet, like I said. It might be time for bonds, but it's not time for equities yet, in my opinion. Here's NVIDIA, beautiful setup. If you guys look at the weekly, clear rejection off the 50-day moving average last week. Very, very clear. And now we're just kind of hanging around here. Does it go up? Does it go down? I think it can go up a little bit more. I don't think it'll reach last week's high. If we take out last week's high, which is way up at 188, then this play is void, obviously. I don't think we'll get anywhere near there. Maybe a little $3, $4, $5 bounce, and then it's gonna roll over again, in my opinion. So that's what I'm watching for on Nvidia. Apple as well. Obviously, you guys know I crush this one every time. I'm waiting for this one. I said this morning, if the bear market rally gets legs, we can go all the way to 140s on Apple. As you guys seen here, huge pop today, 129.89. Oh, this is the weekly. You guys see today we started at 132. The high of the day was almost 137, almost a $5 move. I gave you guys Apple pre-market. I hope you guys paid attention. But other than that, I'm just waiting for Apple to rally up to the 140s. That's where I'm going to start taking my shorts as well. As you guys see here, the 100-day moving average is curling down. 50 days already coming down, and the 20 days coming down in a big way. So we need this bear market rally to reach this 140s on Apple as quick as possible if we want to short it. IWM, you guys, we already went over this. JPM is another one I'm watching. I have an alert here at the 20-day moving average. As you guys seen here, huge rally. Now we're just kind of consolidating. But don't be tricked by this, guys. CAT was the same pattern. DE is the same pattern. A lot of stocks. BA is the same pattern. And then they just resolved upwards today. So we might have a little bit juice left in these stocks. That's why I'm not rushing into puts. You guys know I usually catch very close to the top, if not at the top for the puts. That's why I'm just being patient right now, playing a little here and there, small longs just for fun. But I'm watching this 133.31 on JPM. CAT, as you guys know, we got out of the puts successfully through 2 or 3 times already. We've hit CAT all over 20, 30, 50%, like small gainers. But as you guys see here, just complete bull flag, complete breakout. All-time high is 246.69. It's less than $5 away now, an all-time high on CAT. It's from way back in 2021 in June. So almost a year and a half back was the all-time high. And it looks like a very clean breakout. Like, how can you say this is a weak stock? We literally gapped up on earnings. We left a bunch of gaps below. We did. When it's time to short this one, it's going to be a lot of fun. And I'm sure I'm going to get it, but it's not yet. As you guys see here, huge consolidation after a big earnings beat. Gapped up. We closed all 52-week high here. And we'll see where it goes from here. And when it's time to short, I'll be calling it out. You can trust me on that. Here's Lennar. Home builders have no business up here. I still do have a couple puts in this one. I'm not even worried. I don't even watch them. I'm waiting to add my real position on this one. As you guys see here, earnings gap up. Just rode the 20-day moving average all the way up. Not a single close under the 20-day moving average since way back in November 9th. So as soon as it closes one day under the 20-day moving average, take puts. Like, it's very obvious. There's no need to guess. There's no need to buy it at all-time highs. If it closes one day under the 20-day moving average, which is at 88.78 right now, short it. And AMD, another one I'm watching. AMD and NVIDIA are tough because I love shorting AMD. It's one of my favorite shorts. You guys know my hit rate on that one. There is a big resistance zone here up at 71, 74 area. So if it gets there on this bear market rally, which it very well could, the 20-day moving average is at 71.09. So around there, I'm going to look for puts far out on AMD as well. PDD is one of my favorite charts right now set up. So once this bear market rally ends, I do have some PDD puts that I'm looking at. They're on my watch list. As you guys see here, as soon as we started rallying, we dipped to the 20-day moving average. As soon as we started rallying, dipped to the 20-day moving average. So maybe another 2-3 day pop. Why do I say that? You guys can look in the past. Just look at patterns. See this big pop? Came back to the 20-day moving average. The first time we touched it, we had 2 green days and then just complete collapse. So that's what I'm looking for here as well. You guys see this big rally, came back, touched the 20-day moving average, 2-day rally, and then just collapse. So that's what I'm looking for now. Maybe tomorrow and Friday, or tomorrow, hopefully green, and then maybe Friday will be set up for some nice puts on PDD. Other than that, we've called like every single thing that's happening, and hopefully we can stay on this accurate for the rest of the year. I hope you guys enjoyed post market. Thank you guys for coming, and I'll see you later.